My name is Paul B. I'm the founder of Actions to Wealth Online Trading Profits and the West Finance charity Coin. It's good to have your company today, and we're going to have a heck of a show for you, I would expect, as we start and work into the week. Those of you that have just been in Julian's macro market overview have had a really good look at the week. And for mine, what's coming up from Julian, for mine, one of the interesting features this week is finally we've seen a couple of the majors just jump out of their ranges. Julian, you okay?
Yep, I'm good.
So that's had a bit of stuff coming through. We've got dollar CAD busting out of its range. And interestingly enough, for mine, we've got dollar CAD busting out of this range. That so many things have been into the short side, and while it's doing it, we've got dollar yen busting out of this range to the long side. So nice to see some currency movement and suggest that maybe we're going to see a little bit of trend come back into this market and give us an opportunity to get some great currency chats. As I said, if you've just done the hour with Julian on macro market overviews, you've got a really good look. Julian, if you don't mind me saying, I thought the Kiwi and Aussie analysis you did, we got them both very bullish, was really interesting. And I'm kind of with you, it almost felt as if Reserve Bank of New Zealand had said we're going to put interest rates up. So they did. It didn't seem quite the right time.
No, it didn't seem quite the right time. I think some days people need to move off their schedule and go, actually, the world is going a bit crazy. We're just going to ignore all of that. And we're just going to do what we said we were going to do because we can. I'm wondering how much Adrian Orr, I think, to me, is a great pragmatist. So I have him pegged as, well, hopefully one of the great central bankers of New Zealand. I suspect that actually he was under a bit of political pressure to do exactly what he did. But equally, Wellington isn't in lockdown, and maybe he thought the rest of the country was doing the same, doing things as well as they were. So that could also be a driving factor as well too.
Yeah, it looks. I agree with you. I think he may be a great central bank. It's a little bit different, but there may be some lessons for the Reserve Bank of New Zealand. One of the problems is when you say you're going to put it up and you don't last time. If you don't this time, you may start unstabilize a few markets. You're not looking to unstabilize. You may start, of course, and continue. Didn't mean to, and still, I'll be really interested what they say next time, whether they just put this thing. If we continue to be where we are, I guess they've bought themselves 6 weeks. Be interesting to see next time whether they just put a hold on this and say, we're stopped here, or whether they continue to talk bullishly about interest rates moving forward. So it's going to be a fascinating statement next time, I would think. But mate,
So look, I think it's a function of two things, right? So number one, where's the economy doing? Post whatever this mess that we're in at the moment, when it starts to resolve itself. So for those of you outside New Zealand, we have a rising case count that is mostly the result of people ignoring the restrictions that are in place and just doing what they want to do, which I'm sure is a pattern that's being repeated around the world. There's always a percentage of every population who simply does not trust the government and believes that they're obviously better positioned to understand the world than the government is, and there's nothing we can do about that. But sadly, for us right now, they're doing a very good job of holding the rest of us to hostage who are trying to do the right thing. Anyway, guys, look, here's the thing. Right, Paul's right, and as I said in my macro overview, and we'll maybe talk about this in more detail if we look at a picture of the Australian dollar. It's really simple to me at the moment. Right now, the dollar strength is pretty widespread. It's reflecting itself in many different ways around the world. And there's a big core reason for that, and I'll come to that in a minute. But the key thing about the Aussie and the Kiwi is they are, quite frankly, undervalued right now. And the reason why they're undervalued is, number one, Kiwi's raising interest rates, first of the major, the major traded currencies to do so in any meaningful way. The interest rates in the market have been rising for quite some time, but now the central bank's joining the party, right? And to be honest with you, right in the middle of a pandemic, I don't understand what they're up to. But mine is not to reason why, mine is merely to respond. And so I look at this and I'm going, well, that's interesting. So what happened to the currency that day? Well, it didn't go up. In fact, it fell. So you're going, okay, it then may start to recover over the next couple of days, as I think it should do. But I think this is incredibly bullish for the currency. So what else is going on? Well, the Australian dollar is in the same situation. I think the last few days they've reported a record trade surplus in terms of money. And I think that's pretty critical, right? So when you do your economic theory, it says that, if the currency is in trade deficit, i.e. more people, you're buying more things from overseas than you're actually exporting, then that makes sense that your currency over time should decline. It doesn't always work that way because economics is a funny old thing, but let's just run with, right? And on the other side of it, they say, well, yeah, hey, when you've got a trade surplus, it acts like like extra fuel to the currency. At some point in time, it will continue to rally, right? If the Australians were to start to raise interest rates at the same time, then it would really take off. And maybe that's our signal. Right, because with such a record trade surplus, what the Australian dollar is doing down at these levels that I'm seeing right now, 73 cents, something like that, it doesn't make any sense at all. Literally no sense whatsoever. So on the basis it doesn't make any sense, it clearly can't be true for any length of time, right? That doesn't stop it being true for a while, but for any length of time, no. So not a prediction. I'm merely saying that if the US dollar begins to underperform, I expect the Aussie and the Kiwi to lead the charge. Maybe the Canadian might be doing part of it, but the loonie is a currency to me that seems desperately connected to the US in many different ways. I think what I like about the Aussie and the Kiwi is that they're very much related to commodity prices and commodity currencies. And right now, that's a great space, either on the protein side or on the raw side or on the basic primary industry side. So whatever you have for both of those two things, I guarantee there isn't a farmer in New Zealand who isn't high-fiving other farmers at the moment. They're all having a great time, despite the rest of us struggling a little bit. So same thing's true clearly in Australia, right? If you dig things out the ground, you're making a lot of money. So here's the thing, right? When the US dollar turns around, I expect the Kiwi and the Aussie to lead the charge. However, I can't tell you when. Okay, you guys are all the traders. You can see this as well as I do. When we look at some charts, let me just go in and maybe just share the screen quickly. We just have a quick look at this, guys. For those of you who saw my macro overview, you'd know what I'm talking about. It's all a little bit boring. We'll just look at it one more time. Look, here is the weekly chart on the Aussie. I continue to look at this. We have a higher low in place. We have a ring low on the weekly chart. It really could have done with closing above that high of the low weekly bar to really trigger it properly. So I call this a grind. We're going to in grind higher mode. So I'm quite bullish on, this is my new trade call, I'm quite bullish on the Aussie and the Kiwi going forward, but I have no idea when they're going to start to perform against the US dollar. Literally no idea at all. Can't help you guys. Follow it as you see it. I'm sure you can look at seasonal patterns. Hey, look, one key thing I want to talk about. I don't think we have Ainslie with us tonight, so maybe I have the freedom to talk about oil a little bit. Oil, as you know, has been 7 or 8 weeks up. Is that too surprising? Well, no, because its sister commodity markets have been going completely insane. Okay, so if you look at coal in terms of the last 18 months is up by, well, I don't know what, like 5 or 6 times, something crazy. Let's say it's around about $60 and now it's 240, right? So it's up by 4 times, right? Factor of 4. That means oil at $60. Roughly, which is where it was, if you like, looking at the April time of this year, should probably be somewhere near $180 now. Okay, so that gives you some idea of the scale of what we're talking about. Natural gas futures in Europe and around the world, as you well know, if any of you either use or have any connection to the electricity industry whatsoever, and know that prices are going up around the world for electricity, and that is because gas prices are going up and coal prices are going up around the world. So therefore, people respond by putting up electricity prices because that's where most electricity gets generated from still these days. And as you can see, you're looking at natural gas having more than doubled over the course of the last 9 months. So again, what you're seeing, that puts the oil market up at about $120. And where are we sitting? We're sitting at 80. So is it surprising in my mind that oil is rallying? Is it surprising that oil is rallying? No, of course not. Right, so when you go look at the chart, what have we got? We've got 7 weeks straight up. What is surprising is something called volatility. Oh my God. Look at Wednesday and Thursday. Oil peaked on Tuesday at $79 WTI. The low was 75. That is a $4 decline in 36 hours. Insane. Absolutely insane. If you want volatility, there it is, right? And this is one of the most deeply liquid traded markets on the planet. And it moved $4 or $5 in the space of 36 hours on nothing at all. Because what happened on Friday ended up where it started. So a total movement at $8 or $9, right? You'd have sold at the top, bought at the bottom, then you could have made the whole lot, right? So here's the thing, right? Why is the volatility coming in? Well, the volatility is coming in for a lot of reasons, most notably one key one. And here's the big thing about commodities right now. They're all going up in price. 70% of all commodity transactions, raw commodity transactions around the world, 70% are invoiced in US dollars. If the price of something doubles, you need twice as many dollars as you did before. Okay, that's just the way the world works. So do you think right now that there is a shortage or a surplus of dollars? Well, the short answer, because I'm going to help you, is that there is a shortage of dollars. Right? Why? Because everything costs an awful lot more. You just need a lot more dollars to buy the same amount of stuff. Okay, and this is the crazy thing that we're seeing. So why is the US dollar rallying? Well, it doesn't take a genius to figure that out now, does it? Because we can all do the maths. We say, oh my God, all these commodities have doubled in value. That means that we need twice as many US dollars. So is it surprising the demand for US dollars is ridiculous and the supply is restricted, and because it doesn't change that much? And so therefore the price of that commodity, in this case US dollars, is rising. No, it isn't. There's our thing, right? So perversely, we could see a situation whereby some of those commodity prices fall, US dollar falls, and that would be our cue for the Aussie and Kiwi, which then doesn't make sense because the price of those commodities is falling. But nothing in life often does make sense. What happens is you're unleashing pent up buying power. Then that's the key thing. So I remain bullish Aussie Kiwi, regardless of where commodity prices go. But here's the thing: the Aussie and the Kiwi probably won't go up until the US dollar starts to come down, which won't happen until commodity prices at least stabilize or else start to fall, because it's just so expensive to buy anything these days. I think probably for me, Paul, that's pretty much it message wise. I don't really have a lot else to talk about. If you really want to hear what I've said, I put 50 minutes into macro overview just now. I don't really want to go ahead and repeat myself, but just go with the US dollar rally has been caused by a shortage of dollars as being our thought for the day.
Cheers, mate. Really appreciate it. Always interesting to get your insights. And I watched most of that 50 minutes on the macro stuff. And if you get a chance, guys, I really encourage you to take a moment and watch it. It's a great start to the week. And I want to remind you guys with this show that you have a couple of options on a Sunday afternoon. You can come and join us for an hour. We go through the whole team and do everything. Or you can wait about another hour and we'll start cutting these sections up. And you can just come and watch Julian's section or Ash's section or Alexis's section or Ainslie's section or Lloyd or Shukri, whatever it is that your thing, you can do it that way. Whichever way works best for you is great with us.